All those groups, Vanguard, Merrill, Bank of America, are very tightly aligned with Ms. Warren. If you look at Ms. Warren's biggest contributors, guess who they are?
Mhm.
I want to live permissionless. And I'm tired of having the bank have to give me permission to get my money, or a brokerage firm give me permission to take my securities and transact with you. In a permissionless world, banks, brokers, insurance companies, auditors, accountants, they're less important. And that's why this is so feared.
Morgan Creek Capital founder and CIO Mark Yusko has been warning about the huge conspiracy against the development of the cryptocurrency industry in the United States for years now. While many investors may chalk up his warnings to nothing but mere conspiracy, we all got a first-hand experience of this deep conspiracy after the spot Bitcoin ETFs were launched earlier this month. Despite the first day of trading being such a rousing success, with nearly $5 billion in transaction volume, asset managers like Vanguard quickly announced that they wouldn't be allowing access to the new products on their platforms. According to reports, Citigroup, Merrill Lynch, State Street Corp, UBS Group AG, and Edward Jones either directly refused clients access to the new products, allowed only select customers to trade, or said they wanted to evaluate the situation further before making a decision. Vanguard, the most popular detractor, said the Bitcoin-based exchange-traded funds do not align with its focus on asset classes, like equities, bonds, and cash, which the asset manager described as the building blocks of a well-balanced, long-term investment portfolio. In its statement released on social media, the asset manager said, "Spot Bitcoin ETFs will not be available for purchase on the Vanguard platform. We also have no plans to offer Vanguard Bitcoin ETFs or other crypto-related products." In a recent interview with Thinking Crypto, Mark Yusko explains that there is a deep link between these traditional finance players and anti-crypto senators like Elizabeth Warren and regulators like SEC Chair Gary Gensler. He adds that this is a case of the old trying to stop the growth of the new so it can continue to rule. However, in this case, the old is an 800-year-old industry that fleeces the world of trillions of dollars per year. We will now bring you clips from Mark's interview as he talks about Jamie Dimon. Please watch the video to the end, hit the like button, and subscribe to the channel for more videos like this. Thanks and enjoy.
What does Jamie Dimon do? He runs the largest bank in the world. Well, second largest. Bank of International Settlements bigger, but he runs one of the largest banks in the world. It's a really powerful guy. So wait a minute. What does blockchain technology do? It does to financial services what the internet did to media and commerce. Right? Amazon exists because of the internet. And mom and pop shops, a lot of them went out of business because you can buy it from Amazon. Same thing's going to happen to finance. So he runs a financial services firm that is threatened by this new technology, Bitcoin being one manifestation of it. And so, yeah, he's nervous.
Yeah.
My other view is you can always judge the quality of an idea by the quality of its detractors.
Mhm.
Right? If you have an idea and no one who's important or meaningful hates it, it's probably not really that big an idea. If you have an idea and people who have power and influence don't like it, you're onto something. And you can go back in history, we just had Martin Luther King Day, right? He had some detractors in really high places and probably ended up, costing him his life for that, right? For taking a stand for human rights and civil rights. But if nobody cared about that, then it wouldn't have been a big idea. But it was a really big idea. I want to live permissionless. And I'm tired of having the bank have to give me permission to get my money, or a brokerage firm give me permission to take my securities and transact with you. In a permissionless world, banks, brokers, insurance companies, auditors, accountants, they're less important. And that's why this is so feared But just like every innovation, right? The internet was feared, air travel was feared, the
Automobile.
radio was feared, television was feared, electricity was feared. There are these great pictures from the 1900s,
Oh yeah.
electric wires and these demons coming out like it was going to ruin the world and it was going to poison everybody. No, electricity is awesome. It makes my life so good. It makes what we're doing possible. And blockchain is the same thing. Bitcoin is the same thing. So it's big. It's here to stay. And here's the thing. There's 30 trillion in boomer accounts managed by financial advisors. It's a lot. 30 trillion. If 10 basis points goes into these ETFs, okay, that's $30 billion on an asset that trades about $10 billion a day. That'll move the price a lot. If 1%, which is not even crazy, 1% should be like the minimum you should put in. I'd argue 2, 3, 5, 8, 10, but 1 is the minimum. That's 300 billion on an asset with a current market cap of around 900 billion. So we're talking about a really, really big growing demand. And what people forget, when GBTC launched, they raised about $10-ish billion of new fiat that went into GBTC. And the price of Bitcoin went from about 10,000 to 59,000 in a matter of months. I mean, it was a total parabola. And yes, then it crashed down to 30, and then it went back to 69, and then it crashed all the way down to 15. And today, we're closer to 69 than we are 15. So that, I think, history is going to rhyme. And so as that parabola, as that FOMO picks up later this year, post the halving, and we get into what's called crypto fall, which is when all of the activity and the media attention, and I think we could go very, very quickly from where we are today to 6-digit Bitcoin. I mean, like faster than people can imagine.
Mark is expecting another parabolic cycle for Bitcoin and other cryptocurrencies and digital assets. According to the renowned hedge fund manager, we are now in crypto summer and have been since June 2023, around the same time that BlackRock applied for a spot Bitcoin ETF. On price movements, Mark believes the really parabolic moves won't come until crypto fall, which will begin around June 2024 and continue until mid to late 2025. During this period, Mark predicts Bitcoin prices will finally hit 6 figures, going from $42,000 to at least $150,000 per coin. Mark also believes Bitcoin could go well above $150,000 to around $250,000 if more institutional investors buy the ETFs. For now, it has been reported that the closed-door meetings and marketing pitches are still ongoing, and they should begin to bear fruits in the coming weeks. Let's get back to Mark's interview. This time, he talks about Vanguard, Merrill Lynch, and others who have refused to allow access to Bitcoin ETFs.
What they're saying is, all you young people, all you millennials, Zoomers, we don't give a shit. We got the boomers, and the boomers don't want this. They want us to be the buttoned up Wall Street types to say, no, this is bad. That's fair. That is a calculated decision, I will argue, made by boomers, because boomers are the ones running the firm, that has a limited lifespan.
Right.
Because here's the thing. All of us, every single one of us is going to die.
Yep.
Every single one of us. I mean, everyone eventually, but the boomers first. And we're all going to die. And all that money that we think we have is going to y'all. It's going to the Zoomers and the millennials. And so if Vanguard and Merrill Lynch and Bank of America and UBS piss off those people, what's going to happen? They're just going to leave. So their mom or dad, their grandpa or aunt is going to bequeath them the money, and they're going to take it out. And I actually see this. I have a family harmony account at UBS. My brother-in-law is a financial advisor. And he took over his dad's book. And all his dad's clients are passing on, right? They're 80s and 90s and some even 100. And the kids come and they take all the money out. He gets about 10% that stay. 90% just leave. And now, by fanning the flames of this digital divide, I just think it's a bad idea. I mean, 29% of millennials own Bitcoin, 4% of boomers. Okay, so with the ETFs, that 4 is going to go to 40, my number, picked out of the air, like 85% of statistics made up on the spot. So, and that 29 eventually is going to be 100. I mean, I say this all the time. Use a prop. I have 3 grandkids, 1, 3, and 5. My youngest is a Gen A. Actually, I think all 3 are actually Gen A, but I always talk about my youngest because she's 1. She'll never have one of these. She will never have a leather wallet. In her whole life, she will not know what paper money is.
Right.
Not ever. And so she will grow up using digital assets. She will grow up exchanging digital assets, stable coins and Bitcoin and whatever. That's a different world.
Absolutely.
And so, yeah, you can cling to this big nest egg that you've created for yourself at Vanguard and others. But I just think it's a bad decision, because no matter how much you don't want the future to happen, if you're an incumbent, it's going to happen. In biology, there are 2 states, only 2, growth and death. You're either growing or you're dying. And I prefer this one. And if I were in charge of these big firms, which I'm not, I would be embracing. Now people say, but if you embrace the new, then you're going to piss off the old and they're all going to leave.
In other news, senior Bloomberg ETF analyst Eric Balchunas believes another multi-trillion-dollar financial giant is bidding its time to get into the Bitcoin ETF race. According to Eric, Charles Schwab, an $8.5 trillion financial giant may be weighing second-mover advantages, like rolling out shock-and-awe low fees. They may shock the world and offer something that is 10 basis points in a few months, Eric said in an interview. In a follow-up post on X, he added, "Don't sleep on Schwab. They're never first to market in anything, but they make a big impact when they come in with dirt cheap fees plus 30 million active brokerage accounts. And they do not like fidelity, so FBTC's success could annoy them to file something sooner rather than later." It would seem more exciting developments are to come for Bitcoin and the entire cryptocurrency in the coming weeks and months. Please share your thoughts on Mark Yusko's outlook and predictions in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.